Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Stocks pulled back Tuesday as a sell-off that has engulfed Wall Street in recent weeks resumed after two straight winning sessions. The S&P finished back in the red, shedding 1% and nearing correction territory. We're going to dive into the rest of the day's market trends. Then Nvidia's GTC conference is underway with CEO Jensen Huang already making headlines, but it isn't the only chip maker making news today. We're going to bring you the very latest in the semiconductor sector. Plus, 2025 was supposed to be the year the white-collar job market got hot again. Instead, job seekers are coming up empty-handed. We're going to explore the current state of the labor market. Well, Nvidia's GTC is underway with CEO Jensen Huang giving a keynote at the conference, but another chip maker we know is also making headlines. That would be Intel CEO Lipton starting his job today and trying to right the ship to compete with names like Nvidia. For more, we're bringing in Lou Bassanis, founder and chief strategist at the Bassanis Group. Lou, it is good to see you. So I want to start with a name I know you know very well, Lou, and that would be Nvidia. I was assured, Lou, when they had earnings, I had smart financial analysts come on here, Lou, on the show. I asked them, okay, what's the next catalyst? And some of them said, listen, you got to look at GTC, mark that out on your calendar. So we had CEO Jensen Huang. He takes the stage today, Lou. He makes some news, he makes some headlines, but the stock, it finishes down, Lou, almost 3.5% on today's trade. What happened? Were investors hoping or looking for news they just didn't get here?
I think it's just a tough tape, and Nvidia has become a name where it's what have you done for me lately, right? I mean, you got to keep innovating, and you got to keep showing the sales, and it's a victim of its own success to some degree. It's been growing sales and earnings at such a blistering pace that, you know, even healthy growth doesn't really excite investors. But again, you start looking at it now on a fundamental value basis. I mean, if we rewind, I don't know, 2 years ago, everyone was saying that Nvidia is so overvalued. Well, it grew into that valuation. It's trading now at about 26 times forward earnings. I mean, after this pullback, you know, it's down from north of 30. It starts to get compelling given the growth. And if you listen to the presentation today, talking about 100 times more demand for AI chips than we originally anticipated. That's a lot of chips that need to be developed and sold in the coming years and decades. So I think long term, the trend's intact. Short term, you're just a victim of the market right now.
So if it looks compelling here, Lou, in your opinion, stock's down about 13% year to date. Does that mean, are you buying here?
Yeah, so I had started a position later than everyone else. So that was probably the tell of the top. About 6 months ago, I started buying. But yeah, I'm acquisitive here, adding to that position. I think you have to own Nvidia. It's kind of a core holding in the market, the tech, just like you have to own some Apple. But, you know, again, I don't want to get overexposed to a name that's been, you know, traditionally volatile. I mean, I think back in big tech, you know, we look back on the days when Twitter was publicly traded. It was the most volatile stock around earnings. Netflix, Nvidia follows in that same DNA. I don't know that it's one you want to be buying every dip on, but I think you have to have, because it's such a big weighting in the index, you have to have some exposure to it.
So as a chip investor, Lou, and when you want to invest in this space, you're owning individual names. You know, you like Nvidia. Are you just buying individual names? You know, are you also buying ETFs? How are you playing it?
Yeah, so I go top down, bottom up. I play the trend with an ETF, low cost. Make sure that you don't have to worry about single stock risk. So buy the iShares stocks ETF. It gives you the coverage and exposure to what's arguably one of the biggest growth trends we've ever seen, you know, after smartphones. I mean, chip sales were up 20% last year to north of 600 billion. But then I'm opportunistic. I look for pullbacks in names like Nvidia. I look for, you know, I like an ARM Holdings, them coming back public. Their royalty revenue model, that business model is really compelling to me as well. And then I'm looking for small and microcap names potentially that could be the Nvidias of tomorrow. And, you know, again, a lot of speculation there. So largely it's kind of land and expand from the ETF and then find one-off opportunities that could add some additional upside without that much more risk.
You know, investors, Lou, we know, on their radar right now, they got Trump tariffs, they got government firings. You know, we know that's made folks get a bit nervous about what U.S. economic growth is going to look like in the quarters ahead. If I'm nervous, Lou, do I want to push into cyclicals like semis?
So this is funny because I would say that the nervousness about a recession is overblown, like it has been for 2+ years. I wrote an op-ed back in the middle of 2023 for Newsweek about this. And the other thing is, I think there's a misconception that semiconductors are much more cyclical than they are. I mean, the only time we've seen really big drawdowns in demand for semis is coming out of the financial crisis and then through COVID. So, I mean, those were arguably the worst economic malaises we've ever experienced. So we'd expect pretty much every sector to experience a pullback in demand. But if you just look at chip volume, unit volumes, the trajectory of that over the last decade, the inclusion of chips in just about everything we wear, do, touch, this is a growth trend that's well intact. I think you have to have exposure to it in your portfolio. It's not just about AI. I think that's a misconception too, that everyone thinks, well, chips are just AI. I mean, you get into your average automobile, it now has so much more chip components as part of that. Wearables, I mean, the list goes on where chips find themselves, over 1 trillion units sold each year. So I think this is, like I said, something you have to have exposure to regardless of the economic environment that we're in.
As investors were always taught, Lou, you follow the semis because they lead the market on the way up and on the way down. I also want to get your take on another name, Lou, which is Intel. New CEO is named there. Investors cheered that news. They cheered that headline. Did you share in that excitement, Lou?
I'm a little bit tougher to impress here. I mean, I just think Intel is really struggling to reinvent itself. And for me, the tell has always been show me your patents and I'll show you where your profits are going to be. And Intel really has not been an innovator. I mean, you look, their patent filings peaked in 2016, 2017. I'm not as excited here. I think, look, I don't think there's a ton of downside because we already know that there was talk about breaking it up and spinning off and selling, more value in the parts. I think you have, it's close to tangible book value. But I think, the new CEO's got a tough job ahead of him. I mean, it's the opportunities there. I would say it's kind of like Steve Jobs coming back to Apple in 97. Great opportunity, but it got a great risk there too. He could fail miserably just because Intel becomes a victim of just being around too long and not innovating enough to really break out for the next decade or two.
So you look at the chart here, Lou. It's had a nice move here now in 2025. Of course, pull back the last 12 months. We're still down about 40%. You don't look at that, Lou, and say, okay, this is a chip giant that at this point just looks undervalued at these levels.
I'm not impressed with the innovation. I mean, I think they need to do something bold. I mean, we saw, Alphabet today make a big, bold acquisition in cybersecurity. I think Intel's got to do something similar in the chip space. I mean, it sounds crazy. Maybe you do a merger of equals with ARM somehow. I mean, that's probably a 2% probability of ever happening. But for Intel to become a relevant name again in the chip sector, they've got to do something that's very different. And I think, look, the new CEO has plans to do that. He's not making any apologies saying that there's going to be big changes coming. I think not spinning off the foundry is a smart move. Keeping it inside and really ramping up that business to become more like a Taiwan Semiconductor is probably the best path forward and the best chance that Intel shareholders have to make money. But for me, I'm kind of in a wait and see mode. See what he does. First day on the job, it's a little bit too early to judge. Let's see what some of those initial strategy changes and shifts are. And then I'd rather pay up for a little bit less risk. All
right, fan of Nvidia, Intel, not so much, at least not yet. Lou, great to see you as always. Thanks for your time.
Good to see you too.
Well, U.S. stocks closing lower as the tech rout resumes. Yahoo Finance's Jared Blickery joins us now with the trading day takeaways. Jared.
Thank you, Josh, and that's it. My first takeaway here, the rally is fizzling. And what rally, you might ask? Well, that was the one that began last Friday, and hopefully it's not over. And we have not undercut that Friday or Thursday low, I should say, but we have run into some turbulence. And I think it's fitting that we're heading into a Fed meeting tomorrow, Josh. Chair Powell's going to get a lot of questions about his data dependency, and we've seen this bifurcation in the market between the hard data and the soft data. And I was actually talking to Greg Dock. He's a chief EY economist. This is on an episode of Stocks in Translation. He was talking about this very phenomenon. Episode comes out this Thursday, but we got a preview here.
There's a disconnect between how consumers, for instance, have been feeling over the course of the past 2 years and how they've been spending. What matters for the economy is really how they're spending. And so I pay much more attention to the hard data, even though I use the soft data as a potential gauge of how people will spend. I pay a lot of attention to how they're actually spending their dollars.
Nevertheless, it's the soft data that's getting so much attention because we have these surveys that have been around for 40, 50, 60 years, and they are hitting records not only to the upside, but also the swiftness to the downside. There's just a huge amount of variability in there. So We'll have to wait and see what happens tomorrow and what Powell says about that.
Kind of downbeat stuff here right now. I mean, any silver linings? Can you give me anything?
Seasonality. Here, let's take a look at it. This is my March seasonality map. And I had two different maps. One was bottoming last week. One of them actually bottoms on the 19th, which is a day away. And maybe we already have bottom, but the point is, in the seasonality map, if you look at the bigger picture, it's really after March that things start to turn up. And I have the inverse of this with the VIX right now. I'm just going to fill this in because we got a little bit more price action than we had last week. That was the last time we updated this. Guess what? We are following this pretty closely. We're a little bit ahead, but if this continues into April, well, that's probably the time that we'll see stocks lift off, and maybe it just takes a couple weeks to find their footing, but that's the good news.
All right, Jared Booker, point number 2.
All right, Magnificent Seven not doing quite as well, doing a little bit worse than the ARC components, the ARC innovation components. So it's really the biggest tech versus the smallest tech. And I'm going to show our mega cap board here. This isn't just Mag 7, it has Berkshire Hathaway, and it's year to date. You can see Berkshire really just blowing everybody else away. Eli Lilly is in there, but I want to show you what's happening in ARC, and that's down 15%. And then we have the Mag 7 ETF, that's down 15.5%. And it's not just a difference of half a percentage point. I want to chart this real quickly. Here's ARC, which is hanging out. It's right down here by the bottom of its lower end of its range. Hasn't exceeded it yet to the downside. And the critical difference here is that the Mag 7 did today. Mag 7 just put in the lowest price of 2025. And so we're not looking for huge outperformance here, but I think my takeaway is that the Magnificent 7, one of the weakest places in the market right now.
So with all this red,
yes, some
deep red, what looks good?
I'll tell you what looks good. It's shiny, it's yellow, and it rhymes with bold. The gold market, I just made that up. Gold market cap hit $20 trillion this month. That stat comes from the World Bank. And let's chart the price today. Almost hit 3,050. It hit 3,047. But this is the bastion of strength that we've been tracking in the market. And I think it was really interesting today that we had the Bank of America Fund Manager Survey. And in the event of a trade war, 58% of the respondents said that gold should be the biggest outperformer. You take a look at what was number 2 and number 3. That was the 30-year. Then it was Treasury bills, so the safety of bonds and bills. Only when you get down to number 5 or 6 do you start to see Bitcoin and stocks, each of those tied at 2%. Almost forgot, we're on gold here. Let me show you the year to date so we can get the latest price. All right, 3,041, but we did hit 3,047 on an intraday basis just a little bit ago today.
You mentioned Bitcoin. Anything else on your radar there?
Let's just get a current price here, and here's our crypto board. We can see down, well, that's for the year. Let's just check out the last 24 hours. Still down 2.5%, 81,000. I'm looking for 70, 72. 70. Doesn't change.
Yeah. I know. Thank you, buddy. Appreciate it. Stick around. Much more Ask for a Trend right on the other side. 2025 was supposed to be the year the white-collar job market got hot again. Instead, job seekers are coming up empty-handed, with almost half of Americans feeling stuck in their current jobs and staring at salary deflation if they consider making a move. Those lucky enough to have stable employment are holding on tight. Well, joining us now is Elise Gould, Economic Policy Institute senior economist. Elise, it is good to see you. So there was this interesting recent story, Elise, in the Journal, and it was kind of talking about how it used to pay to switch jobs, and now, according to the Journal, at least not so much. The Journal notes the salary difference between those who stay in their roles and those who change jobs has collapsed to its lowest level in 10 years. What is going on there, Elise? What explains that dynamic?
Well, you're absolutely right. Then when we think about how to bid up your wages, how to get some leverage with your current employer, the best way to do that is to look for another job and either take that job and get a better offer or come back to your boss and say, hey, I'm going to leave if I don't get this kind of matching offer from you. And what we're seeing is that people are staying put more. So they're not looking for those other offers. They're not quitting. And that lower hires rate also means that that lower quits rate also means that the hires rate is lower. So there's just less churn in the labor market. There's less people looking. They're not feeling very optimistic about being able to find a better job for themselves. And I think there's a number of reasons that might be happening. One is the economic uncertainty right now. Absolutely. There's uncertainty. People just want to sit tight. We also saw that there was a lot more job switching in the immediate aftermath of the pandemic. So in 2021 and 2022, there were many people that were doing this job switching, and maybe they found a better match, and maybe there isn't that better match out there right now for them.
And Elise, when we talk about this kind of less optimism, less churn, do we know, Elise, do we have line of sight? Is that fairly broad based, or are there kind of meaningful differences we can see in between demographics, between different industries and verticals?
Yeah, a lot of the data doesn't offer that kind of demographic cut. I would love to see that. Right now, the data that so many of us are paying attention to is what's happening with the layoffs. So with hires and quits a little bit softer than it has been, that hasn't been a problem because layoffs have also been historically low. And now there's been this uptick in layoffs, not just among federal workers, but also contractors, and now announced layoffs very, more broadly in the private sector. So that hasn't played out in the data yet, but it's certainly something that we want to be looking at to see where, who is, maybe nobody is safe. I don't know yet what that's going to look like.
And Elise, Elon Musk and those Doge boys, they appear pretty serious about cutting. What is going to happen, and what does it look like if and when we really do see meaningful layoffs start to happen here in the public sector?
Well, it's going to be huge. That has huge ramifications, not only for those workers, for the services that they provide, and for what that means for all the private sector jobs that lead into those public sector, that feed the public sector employment. And so what we've already seen, I think the leading edge of where we're going to see those cuts is in unemployment insurance claims. We saw that jump up in the last couple of weeks, about 300% over the same weeks last year. We already saw that in the federal employment data. There's been a drop there already. I think in coming weeks and in the next couple of months, we're going to see bigger effects of those layoffs, not only in the federal sector, but in the broader economy as well.
So bottom line, Elise, and I know, listen, there's a lot of moving pieces and variables, but as an economist, as you think out here, you see the labor market evolving how over 2025?
I'm not optimistic, unfortunately, given there's policy uncertainty, so we don't really know how that's going to play out. But certainly what we're seeing on the horizon is that this is just the tip of the iceberg, and there is more trouble brewing. Absolutely. I'm sort of disappointed to report that I think that there will be some kind of recession on the horizon, maybe not in 2025, but unless there's big change in the policy direction that this country is heading, unfortunately, I think there's going to be trouble.
Elise, we'll leave it there. Thank you so much for joining the show today. Appreciate it. Nvidia CEO Jensen Huang taking the stage at the company's GTC 2025 conference, the chipmaker revealing a slew of announcements from new chips to new partnerships. Yahoo Finance's Dan Howley is there. And Dan, my friend, you just spoke to Jensen. Tell me what he had to say.
Yeah, Josh, got to talk to Jensen shortly after the announcements here. Obviously, he was very effusive in how this is going to help improve things like learning algorithms or thinking AI models, things along those lines like DeepSeek. But then he also went into some additional color. He explained how he sees million GPU data centers that will be linked together, multi-million GPU data centers, some visible from space, he said. He talked at length about robotics and how we could see more humanoid robotics in the next 5 years, primarily, though, in factories where there's guardrails available, and how, when you think about these kinds of technologies, he believes it starts at the software level, not the hardware level, where you go from the software and then you build up to those hardware devices, those humanoid robotics, or even self-driving cars. And he said that those are things that NVIDIA continues to work on. Even more interestingly, he said that NVIDIA is looking to reinvent the enterprise IT space for AI. And we saw that in some of the products they announced today, whether that was the DGX Spark, or their DGX desktop. Now, those are systems that can run similar capabilities to NVIDIA's original DGX supercomputer that they had on offer. And so the idea here is now that they're going to help enterprises build their IT infrastructure around AI. And he said, if nobody builds it, then it just won't get done. And so they're working with partners like Dell and like HP to do that. A lot of big changes here from NVIDIA, not just those two chips, by the way, the Blackwell Ultra and the Rubin Vera, but even more heavy concepts that they're working on.
You know, Dan, at least initially here, investors didn't appear too excited. I saw the stock finish down about 3.5% in today's trade, but you know, you're there on the ground. So I'm curious, Dan, what was the general vibe like there on the ground? How excited were folks there listening to Jensen, seeing what he had to say, what he had to show, and what particularly excited you? What surprised you today?
Yeah, honestly, it felt almost like a concert, like atmosphere. You know, everybody here was very excited. I mean, I'm surprised that there's nobody here right now. When I came in, the lines were up and down the block. The road was closed off. I mean, it was absolutely insane. I had taken a video from inside where it's people up to the rafters in the SAP Center. It seemed as though people were enjoying the show as it went on. Obviously, it was very long, 2 hours plus. And then I think once the robotic talk started to come out again, it really got people going. And, you know, there's one thing that Jensen has pointed out in the past, and this is a conference for developers. So they go heavy in on the math and in on the concepts. And I think, you know, a number of people here might not recognize the importance of that, but that is what drives NVIDIA. And so the general atmosphere, like I said, very much like a rock show, people all over the place. And now they're heading out to check out even more of what NVIDIA has on offer at the convention center here.
Dan, great reporting for us on the ground. Thanks for joining the show. Appreciate it. Coming up, we're looking at another potential market broadening in our chart of the day. More ask for a trend that's right on the other side. We're seeing signs of a potential market broadening, but President Trump's ongoing trade war could complicate things. Yahoo Finance's Julie Hyman joins me now with a closer look in our chart of the day.
We have been hearing investors talk for quite a long time now about wanting to see this broadening trend in the market to sort of confirm that it can keep going higher, that is, or in this case now, resume the rally that we had seen. So this chart looks at the S&P equal weight index versus the S&P 500. In other words, when we see the S&P 500 go higher while the S&P equal weight does not, that implies the S&P 500 is just moving because of the largest cap companies, the large cap tech companies. So basically, when this line moves down, it means things are narrowing. When it moves up, it means they're broadening again. We have seen a little bit of broadening thus far in 2025, but it really just looks like a blip on this chart. And there have been other sort of small attempts at broadening here that have not been sustainable. Investors do seem to think it could happen this time, but maybe the macro environment would need to calm down to some extent. And some investors also think, well, maybe tech would continue to reassert itself down the line. We talked to Sebastian Page about these dynamics. He's the CIO at T.Rowe Price, and he seemed to think that maybe things are as concentrated as they're going to get.
We might have reached for quite a while peak market concentration. You see European markets do well right now. You see, value stocks do quite well, and we're long value stocks in our asset allocation portfolios. So for a value trap to become something else than a value trap, right? By the way, I still think the US tech will dominate over time in the long run. But when you want to invest in a value bet, you have to have some momentum behind it, which we have right now.
So basically, he's saying that this little bit of broadening here could see a little bit more momentum from here. But we've talked to other investors who say, really, the tariff headlines need to quiet down a little bit. We'll see. Josh?
All right, thank you, Julie. And that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.